So your total for this rent to own would be approximately $45,000. That is one of the big benefits that you will see right here. Doing a rent to own as an investor with us, instead of having to put $60,000 down plus closing costs, I didn't even add that in here, you might be at $65,000. Now you're only at $45,000. So you're saving $20,000, if you will. And I always say you can do 3 rent to owns for the same capital as if you bought 2 rentals.
What is up, you guys? Matt McKeever sitting down with Adam from JAAG Properties, and today we're going to dive into rent to owns, but specifically kind of the investor side of the story. So what investors can expect, what the average investor look like, and we're actually even going to dive into a real life deal that Adam will break down for us. So first of all, thanks Adam for joining.
Well, thanks for having me, Matt.
And so let's discuss just high level, why would someone invest in rent to own, and what's maybe the average investor look like from your guys' end with rent to own properties?
Yeah, so obviously we run rent to owns. We do offer very passive investments that are secured by the property, numerous other securities that I'll go into. But yeah, we're looking for passive investors that want to invest their money in a known, secured, reputable company where they don't have to do anything if they don't want to. It's very hands-off for the investors, but they are on title, they are owners of a property, they are technically a landlord, they're doing a rental, but it's a way to get in for a lot of investors that don't want to do all the phone calls, don't want to look for tenants, don't want the turnover or the capital improvements, right? The phone calls for maintenance. So JAAG offers that kind of like a mentorship in a way, and we run everything from start to finish, ensuring the program's successful for our investors.
Nice. And so let's kind of break down what does that process actually look like for an investor. Yeah. So let's say I have some money, I want to get into real estate investing, but I don't want to be super hands-on. I don't want the tenants calling me all the time. So my understanding is the reason a lot of people invest in rent to own is, like you were saying, it's a much more passive means, but you're still getting exposure to real estate.
Exactly, yeah. So you're exposed to real estate. Obviously there's a property that's been purchased, there's tenants, there's rent being paid. But JAAG's program is very passive for our investors. That JAAG takes care of the vetting the clients from day one. We go out and look for a house, set them up with a house, do the home inspection. All the due diligence is done by us, and that's where the investor comes in. Once the client has found a house, we work with investors to put the mortgage in, secure the mortgage, bring the capital to close the deal, and then we move our client in, and JAAG runs our rent to own program from that case. So in terms of an investor, yeah, we're just looking for anyone that has, capital and has a mortgage holding ability, someone that can go on title and joint venture with us. Again, they don't have to be answering phone calls. That's JAAG's. They don't have to worry about the toilet being clogged, right? Light bulbs, whatever it is, the little landlord issues that could come up to a big issue. Who knows what would come up with real estate? That's one of the exciting things about real estate investing, but that's what JAAG does. That's what we set up. That's how we set our program up. So it is passive for the investor. All they are responsible is for getting that mortgage and bringing the capital, and JAAG runs our proven program from there.
And so we'll dive into a real life example in a second, but if you don't mind, what's the average investor look like to you guys? Is there an avatar kind of that?
Yeah, we deal with variety. I mean, there's no minimum. We get that a lot. What's the minimum number I have to invest? And it all depends on the specific program we line an investor up with. The purchase price, what the client's looking for, whether it's a $200,000 property or $1 million property, right? That specific investors aren't going to be able to, one, qualify for a mortgage at $1 million or have the capital. But then there's some investors that can, and they don't want to be doing the $200,000-$300,000 houses. They'd rather do the bigger houses, bigger purchase prices. I mean, for our returns, the ROI is the same, pretty close to the same on all our programs. We set it up for that reason. So it does come down to what's your mortgage holding ability and how much capital do you have, or how much do you want to invest in real estate. So I do get in touch with the investors, see what they're looking for, what their flavor is, what their criteria is, if you want to say. And then when we have a client that gets approved that matches that criteria in terms of the purchase price or what's the capital needed, I then put the pieces together, if you want to say. I line up the investor with the client for that deal. And then the client goes out and has a look. So Avatar, with the lowest would be 25,000 maybe that we've done on the low end, up to 200,000 for obviously those higher purchase prices, right? So it's anything in between, right?
That's a huge spectrum. Yeah,
it's a big spectrum, and it does allow us to do a lot of deals that we don't have to pick and choose price points, capital, right? We do have a variety of investors, right? That just want one more on a smaller scale, or there's bigger investors that want the $500,000-$600,000 homes and want to do a multiple, right? Obviously, their situations, their income, their capital is different, but we can work with any investor. Basically, if they can hold a mortgage and have capital, we can work with them, and we'll find a program that fits your needs.
Awesome. So it sounds like, as with a lot of real estate investing, it's very situation or property or project specific.
Exactly. Yep.
So let's dive into, this is a real life example you're going to share with us.
Yep.
So just high level, what city was this located in, and do you mind just framing a bit?
So I picked one right here in London. Just thought I'd keep it simple, cut it local, right? So it makes sense. Obviously, the markets would change. You buy this one here is $300,000 house in London, which is getting pretty typical. Yeah. Still on the average price, I'd say. But you take this home, you put it in the GTA, you go farther east, it's 4, then it's 5, then it's 600,000 for the same home. So I just kept one here in London, keep the numbers simple, but we can go through some numbers.
Yeah, let's dive into it.
So everyone that's always asking, show me the numbers. Obviously, here's a real life example. So I'm kind of the numbers guy on our side of things. So I'm just going to go in for a simple example. So the purchase price, I'm just going to put PP, $300,000 home. Like I said, so we've set a client up that is approved for $300,000 homes. They've went out with a realtor. They found the home. They call us and say, okay, Adam, we want to put the offer in. I've already been talking to you as an investor on the side, so we're ready to put it in. In this example, the client brought a deposit of $20,000 for the program. And that's one thing on the side as an investor that we do require a deposit from all our clients. It's good security for us and the investor that you're not putting the full capital requirement. Your capital is offset by this $20,000. And just for an example, if you were to buy a property for $300,000 home as a rental, strict numbers, down payments 20%. So in a normal rental, I'm just going to put a normal rental over here. Your capital would have been $60K. However, with a rent to own, let's put rent to own capital, it's now offset by that $20,000. So instead of $60K, you're only required to bring $40K for the deal for the rent to own program. And obviously the closing, there's going to be closing costs, land transfers fee. So let's add $5,000 for that, a $300,000 home. So your total for this rent to own would be approximately $45,000. That is one of the big benefits that you will see right here. Doing a rent to own as an investor with us, instead of having to put $60,000 down plus closing costs, I didn't even add that in here, you might be at $65,000. Now you're only at $45,000. So you're saving $20,000, if you will. And I always say, you can do 3 rent-to-owns for the same capital as if you bought 2 rentals. So it's a way to do multiples with us, saving capital for for future purchase prices. So that's the upfront cost. So you're looking about $45,000 on a $300,000 home. Now everyone always asks, how do I make money? How do I get my returns? Is there monthly cash flow? Do I have to wait till the end? Do you guys hold all the money? How does that work? So I'll just go into a quick example with this purchase price. So after we've purchased the property, we closed, we moved the client in. For this example here, for a $300,000 home, the rent was, I'm just going to do R for rent, $2,300. So that $2,300 covers the mortgage, property tax, insurance, and then we have what's called an option consideration, which is like a monthly rent credit for the client, if you want to call it. So that's a way that we build a deposit down payment for the client from $20K up. So in this case, they probably needed about 10% down payment. They didn't have the 10% down payment. They have whatever that is, 7%. So they needed the rent-to-own program for us to assist them in building this down payment. Out of this $2,300 for this specific deal, we're cash flowing approximately $800. So with the rent-to-owns, how we do set them up with it is a premium rent. And that again is protection for the investor, that you're able to pull out monthly cash flow along the way. You're not waiting for the end. And the numbers are always, I'd say this is an average number. So you're not just making $100, $200, $300 a month on the property squeaking by. You're actually able to pull out quite a bit of profit, which you could use for another property, and it adds to your cash-on-cash return. So that's where a portion of the profit comes from, and the other profit obviously comes from the sale. So at the end of a 3-year term, and let's use 3 years as an approximate number, the client would then purchase the home from us. They go on title. The good thing with rent-to-own, they're not purchasing at $300,000. Everyone understands their markets appreciate. But at the beginning of our program, we do have to pick that buyout price. And it has to be in writing, in terms, all parties agree upon. We don't get an appraisal. We don't see what the market's done. It's a win-win for everybody, so we pick the purchase price. So in this case, I'm just going to write sale price, or sale. We would be selling it back to the client at $350,000. Again, that's typical for that price range. That's about 5% appreciation per year, year after year. The client understands that, the investor understands that, everyone's on board up front. So that's the sale price there. So from that sale price, you're going to see there will be a difference of, $50,000 to $60,000 on the mortgage. We do return the deposit back to the client, as long with this monthly rent credits that I spoke to before. So the profits, the full profits at the sale, I'm just going to write sale profit. You're looking at about another $30,000. That's in addition to the $30,000 that you would have made in the rent credits or in the cash flow. If you do 800 times 36, you're just shy. So in this example, the total profit from the deal is about $60,000. And if you do the math, an average annual ROI for that deal would be $40,000, over 40% average annual ROI. Just taking the 60 profit by the 45 capital, you're going to get 40. So again, there's some profit at the end. There's some profit along the way. It's usually about half and half, 50-50, we like to say. You're not waiting for the end of the program when it sells to get your whole payment, your profit. You're not getting it all up front. It is split half and half. And again, with JAAG, we're looking for the joint venture partners. So that's how we'd split it up.
Awesome. Yeah, that really breaks things down in a fantastic way. So just for the audience members that maybe have a question, what's being taken out from here? I know you said high level, but... Yes,
so high level. So this $2,300, we're paying the pity, if you want to call it.
Yep. So that's essentially like your principal
interest, property taxes, and insurance. So we cover all that with the $2,300, and then there's the rent credit, but the cash flow would be about $800. So out of that, that's how we figure it out. So all this on a $300,000 house, you're probably looking somewhere around the $1,500 range, based on, again, that's based on today's interest rates. A property tax in London, again, you move this somewhere else, that might go up, $1,700. So it's all relative. And we do run the numbers relative. So if the property tax would be, $300 instead of $250, the rent would go up by the same amount.
Perfect. And so as far as when you're determining what this rent dollar amount is, essentially you're just taking your fixed costs here, your pity, and then adding in kind of what you need in rent credit plus the return for the investor, right?
Yeah, exactly. Yeah, this number does fluctuate. Some clients need $200 saved per month. Some need $800. And again, it depends what their criteria is, right?
Yeah, perfect. So just again, to summarize for you guys, essentially you get into this rent-own deal, the investor would need $45,000 in capital and the ability to essentially qualify for a mortgage on $300,000. Awesome. Well, I think that does a really great way of just breaking things down for us. So let's break down then just for the investors so they understand, what does the actual monthly operation of this look like then? So if, say, I'm partnering with JAAG and I'm the investor, what's happening every month? Am I just getting like a summary sheet, or what? What sort of?
Yeah, it's exactly. So you as the investor, you're not responsible for any day-to-day, month-to-month activities for the program. But yeah, we are collecting the rent. So one way that JAAG is transparent upfront with our investors, we set up a bank account for every single rent-to-own property.
I like that.
You're a joint partner, why aren't you joint on this bank account? So every investor is joint on the bank account, so they can see that we're collecting the rent. It's being collected on time.
Timely.
They can see we're paying the mortgage out of that, the property tax, the insurance. They can, at any point in time, they can check that month or the last year that everything has been collected and paid on time. They can also see the cash flow being split between us. Some's going to their bank account, half's going to our bank account. So it is very transparent. We do property inspections quarterly. So again, the investor does get that report, which will have pictures of the property. It'll have a credit update on the client, maybe their income, what's going on in their life, what's going on at the property. And it just sums up. It's a nice way for the investors that don't make it out to any inspections, because again, they're not required to, they're passive. If you want to sit back, collect your monthly cash flow check from us and get your quarterly property inspection report, you're going to have an update multiple times a year of what's going on, not just at the property, have they done repairs, renovations, but you can check the income expense statement. It's being given to you. We do everything. Even for your taxes, we're issue you the invoice receipt at the end, give you the income expense statement. All you have to do is bring those two things to your accountant. You don't have to do any work. You don't have to do any spreadsheets, any number crunching. You don't have to save anything, any book work. We do that for you as well.
Yeah, so it sounds like it really is a very passive investment strategy. So in essence, the tenant buyer, they're never actually contacting your investor directly, right? All communications flowing through you, so you're never going to get a phone call in the middle of the night or anything like that. And so let's also just touch upon the general maintenance of the property. How does that all work? And if there's major repairs? Yeah,
that's a good question, because I mean, every investor has that question. Hey, I'm putting in $45,000 up front, but how much more is required for me, right? Am I going to have to put in so much per month, so much per year? The answer is no. So with our rent-to-own program, our clients have the pride of home ownership since day one. It's like a home in-training program, right? Home ownership in-training program, where they have to prove to us that they can take care of the costs, meaning they can pay the rent on time to us, they can pay all the utilities on time, plus any repairs, if they want to do renovations, upkeep, that kind of thing. The client's 100% responsible. It is their home, so whether they want to change the wall colors, we've had some clients renovate unfinished basements, add big garages in the backyard, refinish, renovate kitchens, bathrooms. It is a way for our clients to build equity through the program, have that pride of a home ownership since day one. But that, again, it's added security for us and the investor, that if someone wants to renovate the kitchen or finish the basement, that's another, they're not going to walk away. Right?
It should be a net improvement to the properties.
If they do walk away, it's even a bonus, right? So it is a lot of security in that sense. But they are responsible, like I said, not just for renovations, but there's a leak in the plumbing, the furnace goes, right? The shingles blow off the roof. And that is one thing when we're looking at homes with the clients, we make sure they look at the big items, the roof, the windows, the furnace. Are they going to be needed to be replaced in a year or two, or 5, 10, 20 years, right? Are they new, right? How old are they? So the ones that are, you can see a furnace is 20 years old, right? The roof's 15, 20 years. It might need to be replaced in a year or two. The clients that buy those homes are the ones that agree to do it right away, or they have extra savings so they can replace the furnace if it needs to be replaced. Because again, we're not responsible, or the investor is not responsible for that upkeep, for any maintenance issues. The client understands that. They sign a waiver with us before they move in, understanding that. They're at the home inspection with us, so they do understand any deficiencies. Yeah. We make a list of all deficiencies. We have a building inspection sign-off report that we make the client sign, stating they were there, they talked to the home inspector, they understand any deficiencies with the home, so they can't come back and say, I didn't know about this or that. They had the opportunity, they were there at the home inspection. Again, the pride of home ownership, as if they're buying it. You know, they're with us every step of the way. They understand the home. And again, the big thing is that the investor doesn't have to be putting in a couple $100 a month because, you know, a leak or a plumber had to come in, electrician, whatever it is with a normal rental. You're not responsible for that. So that's a big benefit with our program, that you know what you need to put in since day one. You know the profit that's coming out both in the monthly and the sale. There's no hidden keys. There's no unforeseen numbers that are going to come up. That ROI, that monthly cash flow, that's locked in month after month.
Yeah, it's really interesting. I think it's something that we need to really focus on or reframe for our perspectives when it comes to rent to own versus just being a normal landlord. What it really comes down to is your tenant buyer is so much more committed and bought in than your average tenant with just a generic rental, because like Adam pointed out, they literally have put a deposit on the property as well. They're planning to eventually keep that property. So it's really, again, in my opinion, aligning the long-term interests of everyone, which I love. It seems like a real great way, as you guys say, to create a win-win-win partnership, because there's really three major stakeholders when it comes to the rent-to-own investment strategy.
Yep, exactly. Yeah, and I mean, these aren't the clients. We always tell our investors, these aren't normal renter clients. They're people that should own their home. Yeah. For whatever reason, they need a couple more years of our expertise, you know, our crediting, our coaching with them. But they're people with good jobs. They're people that have been able to save a down payment, a deposit, 10, 20, 30,000, whatever it is. So they're not paycheck to paycheck. They have proven to us that they can save money up front. Therefore, when repairs come up, they also will have additional savings to be able to do that, right? It's not, they don't, and they do have that invested interest, like you said, that deposit up front. They're not walking away after year one, year two, right? This is their family home. They've done little things to make it their home. They have skin in the game, right? So it's a lot of security for the investor.
Yeah, I love it. If you guys enjoyed this video with Adam, make sure you smash that like button. Hit the subscribe button if you're new to my channel. And otherwise, what's the best way for people to reach out if they want to get in contact with you or JAAG Properties?
Yeah, any investors, go to our website. My email's there. Alfonso's email's there. But yeah, investor, come talk to me. Shoot me an email. I'll get in touch. I'll put you on our monthly newsletters. We do send out upcoming deals all the time to investors that are looking. Get on that list and you'll see what's coming up.
Yeah, I highly recommend you join the list. I often find myself joining multiple email lists every month just because it's a great way to slowly familiarize yourself with the process. So even if you don't see yourself necessarily investing with JAAG today, but maybe 6 months from now, I'd say it's better to get on that email list now just so you can start to see the average deals that they kind of put through, because I'm constantly getting hit with different emails from JAAG just showing their different properties as well. You guys deal with a variety of different locations as well. So if someone wanted to invest in a particular region, that's also an option, right?
Exactly. Yeah, all across Ontario. So if you have a specific region or maybe you don't, either way, let us know and we will set you up.
Awesome. Well, that's it for this video, guys. Until next time, remember, making money is a team sport. There's more than enough money in this world for us to all make it. But if you're not saving it, I mean, like, what's the point? Thanks, guys. Bye.